Crypto markets are in chaos right now. And you're probably asking yourself, is this the beginning of a long downward spiral? Or are we looking at the last opportunity to buy before the parabolic altcoin run? Recent moves by the Fed have sent shockwaves through the economy, catching everyone off guard. And now investors everywhere are trying to figure out if this is just a bump in the road or if the bull run's canceled, guys. What you do in the next few days could make or break your portfolio. So in this video, I'm gonna break down exactly what's happening, show you why this could be the turning point, and help you decide whether this bull market is still alive and kicking, or if it's time that we need to shift strategies. And of course, the altcoin alpha toward the end of the video is going to unveil one of the most bullish sectors ahead. And it's not what we've been talking about, something that maybe you've been expecting, but maybe not. So let's dive in and figure out what that is. All right, guys, this is gonna be one of the last videos. Well, actually, no, we're gonna do another one next week. And then we're gonna take a little bit of time off for Christmas. But this should give you a very good perspective on things ahead and give you the confidence that you need essentially to endure into the new year until we can rejoice again and talk about things in the new year in the banana zone, as we say moving forward. So as you guys can see, we had a really healthy dip from Bitcoin all-time highs, which we had just last week, up in about a 15% pullback, right? All the way from like 108.5 thousand all the way down to 92,250 or something like that, right? So that's about 15% pullback. And that feels about right to me, right? And we know historically there's been many 30 to 40% pullbacks in every single prior bull run. So are we going to get those kind of pullbacks in this bull run? I'm not so sure, right? We see that the pullbacks generally get less dramatic as time goes on, and we just have a different market entirely, right? So we're probably, we're looking to see less volatility in Bitcoin itself as market cap gets bigger. It just becomes generally more stable. Now, we definitely could, and I'm not saying we're not going to, so plan accordingly. Make sure you take the precautions and make sure that if you're playing with leverage, that you are aware that we could see a 30, 40% dip, and this one could still continue downward. However, it does seem to me like, at least in the interim, we saw the bottom on this wick down here, and you can see it was definitely a wick, a liquidation wick, and we'll get into that in just a second. And as you can see from Venture Bubbles over here on the week, we are still very, very bearish on the week. Lots of altcoins have been bleeding pretty bad. Most things are down around 25 to 40% on the weekly. And you can see on the liquidation heat map over here, you had lots of liquidations in 24 hours, $850 million of liquidations. Most of those were longs. People thought it was going to come back and boom, got struck again and declined. Now, if we look at the Bitcoin ETF flows, you can see a lot of people got scared here, right? And the Bitcoin ETF flows are not immune to market's emotions. And the whole market, it's not just Bitcoin and crypto right now, right? You see the stock markets were selling off too, but we saw a nice bounce today as well. And as you can see yesterday, when everyone was a lot of fear in the markets, you had negative $672 million of outflows in the Bitcoin ETFs. However, zero for BlackRock, right? BlackRock still holding. And we don't yet have data for today, but just preliminarily, it looks much less worse today than it did yesterday. As we can see, we don't have data from BlackRock yet, but we have data from Fidelity, much less selling than yesterday. Whereas Bitwise over here had 43 million the day before, zero today. Had some negative days over here. Thing over here with ARK, less severe than it was yesterday, but still pretty big outflow day at 87 million. Zero from Invesco, plus 5.6 from Franklin Templeton, 000. Of course, Grayscale still hemorrhaging out and getting rid of it. But some of this Grayscale goes to Grayscale's new fund, the one with less fees, 6.4 million. So we'll see what happens with BlackRock when it comes in. But my guess is it's not going to be negative, is my guess. Anyway, we'll see. I mean, the goal is just for them to just accumulate as much as humanly possible. Oh, and as you guys can see, the Ethereum ETF looks a bit more optimistic. So far, all we're missing is BlackRock data, but we see from Fidelity, 13 million of inflow, pretty neutral across the board, no ins or outs. You do have even Grayscale's ETH has some volume coming in at 7.5 million. And Grayscale's new fund with less fees also has some volume coming in. So what does that tell us about, altcoins? Again, this is what we mentioned almost every single day on these videos, is that altcoins are looking quite bullish moving ahead. Like I said, though, likely halfway through January is when I expect things to really kick in, and I don't expect a whole lot of activity between now and the end of the year. Sure, stuff will happen. Sure, things are going to pause, but people will take time off for holidays. People are chilling. Just like myself, I'm going to step away. I will make a video for you guys on Monday, but starting Tuesday until the end of the year, I'm going to take some time off and chill. I suggest that you guys do that as well. If you want, if you don't want to, that's fine too. But I don't expect it's too much wild things to happen, but I could be wrong. If something really, really wild does happen, I will come back and talk to you guys about it. Martin over here says, this is the most significant Coinbase selling activity since October 26th. The price was $66,000. So we saw a lot of selling on Coinbase. This was likely from the ETFs like we saw just the other day. And the question is, did the Fed steal the bull market, right? That's what we want to know when we talked about in the introduction here. And, and it looks like they kind of tried to. The Fed, the SEC, the whole administration is still in power until January 20th. And there's just been a lot of things that have happened. If one were to put on their tinfoil hat right now and say, is this a conspiracy theory kind of driven thing? Are they trying to, leave Trump with a really bad position, crash the markets? Like, I've heard all of this stuff, all these theories from people behind the scenes, over the past week or two. Things like the long-range missiles, from Ukraine into Russia, or the Fed trying to rain on the parade and crash the bull market because they don't want, the Republicans to look good. I've also heard the fact that maybe the Dems and the deep state and these kind of, this is again very tinfoil hat, but I've also heard that maybe what they're going to try to do during Trump's presidency is crash the markets so that, of course, people don't like him and that they blame Trump for the economy and these kind of things. I don't know if they have that kind of power. I'm not sure, but these are all just kind of speculative theories floating around right now. Of course, we hope for bullish markets, but we don't have crystal ball. It's impossible for us to know exactly what's going on here. But Virtual Bacon did a really good post over here. He says, here's the important part. Powell's cautious approach delays a recession. Historically, aggressive rate cuts signal economic trouble, right? Like 2008 and 2020. By moving slowly, the Fed buys time for the economy to stabilize, which is great for risk on assets like crypto. And he also says, so what about the money printer? Quantitative tightening continues with Fed reducing its balance sheet, but it won't last. The US debt crisis ensures quantitative easing return. Once quantitative easing and Bitcoin and crypto markets will explode, the timing is everything. What are the signs of quantitative easing is coming? The Fed is already slowing quantitative tightening. Since May, they've reduced asset sales from $60 billion a month to $25 billion a month, very bullish. And rising U.S. debt requires the Fed to step in and buy treasuries. This is inevitable. We know this for sure. We've been talking about it for a long time. As Walter Bloomberg says over here, the U.S. Q3 GDP grew at 3.1%. The annual rate was estimated at 2.8%. Very bullish numbers, right? This is good for the economy. Very good for the economy. Now, Trueflation shows us the actual kind of what their estimate is to be of inflation. Of course, the Fed's goal is 2%. Right now, we're clocked in at 3%. And you can see it was actually rising from, mid-September all over here. And now we start to see it kind of pulling back, right? And as Virtual Bacon says over here, the Fed won't start quantitative easing until inflation drops further. Right now, inflation is at 2.75%. That's what the Fed is officially reporting. Trueflation says 3%. Nonetheless, slightly above the Fed's 2% target. Once inflation stabilizes or the Fed adjusts its target, the money printer will come back on. Watch for shifts in the Fed's language in early 25. And over here, Chicken Genius says that the Fed just cut rates and you're panicking. We saw the federal interest rate cuts were by 0.25%. And the whole thing, like when Jerome Powell came on stage the other day and talked about his stance on the economy, saying that there's going to be less rate cuts next year than expected, people took this as hawkish, right? Or a negative stance on the economy moving forward. But what we are looking for is signs of that sentiment to shift. And Caleb says, if we're hoping for a sustained bull market, I think this FOMC policy decision and dot plot is exactly what we should be hoping for. A dynamic growth rate for the real economy, continued resilience in labor market, a slight acceleration of inflation, continued Fed rate cuts. And as we see over here from Zero Hedge, as of today, the data came in. So we got these numbers in. It's a personal consumption expenditure, right? Basically, this is just kind of like the basket of goods that people use, Americans use, things like groceries, ham, turkey, rent, oil, energy, gas, these kind of things that people have to spend money on. Are they coming down or are they getting more expensive, right? And as you can see, we actually have better numbers coming in as of today. This is exactly what we were talking about earlier. We want to see that these numbers are getting better before the Fed can switch its stance from quantitative tightening to quantitative easing. So The PCE went from expected at 0.2%, came down. The actual numbers are 0.1%. PCE core, exact same thing. Year over year was expected 2.5, came at 2.4. And the core for year over year came in at 2.8 versus expected at 2.9. So it's exactly like, this is really, really good. This just happened today. That's when we see a bit of a bounce in the traditional stock market and the crypto markets. We see a bit of a bounce today, right? And so the personal consumption in expenditures, also known as consumer spending, is a measure of the spending of goods and services by people of the United States. And this right here is actually what got people quite scared. But if you listen to it, it's people, like I was looking through the comments on this one, and people clearly didn't quite understand what Jerome Powell was saying right here, right? Listen to this.
So if I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
We're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
Yeah. So basically what Jerome's saying over here is that the Federal Reserve is not allowed to hold Bitcoin on its balance sheet, but that's not what anyone has been proposing. So for everyone in the comments to say, oh, Jerome Powell is like so negative and they're saying that we can't hold Bitcoin. No, he's saying that the Fed, which is in charge of the US dollar, is not going to be holding Bitcoin. But Congress, what he said, Congress should consider that. So Cointelegraph says the bullish, there are now 20 companies that hold 1,000 or more Bitcoin. As we can see, the list is growing. And Eric Balkunis over here from Bloomberg Intelligence says it's become so routine, we're getting numb to it. But this is a lot of cash, especially in 12 months of a brand new category. Year-to-date flows have been $37 billion. Their estimate was 10 to 15, and they felt relatively bullish on that estimate as well. And so this is blown by their estimate 2, 3, 4 times almost what they estimated to come in 2024. And as we talked about in the video the other day, we expect that this actually accelerates. So if there was $37 billion of flows coming from the ETFs this last year, imagine next year, maybe there's 50 billion, maybe there's 60 billion, who knows, right? Even up to 90 or $100 billion. Remember in the video, we said that, that the 1% suggested allocation to Bitcoin was kind of like this trial where people get kind of used to the idea. But now they're up so much from their investment that maybe now they're going to get back on the phone and be like, hey, Bill, that 1% allocation that we made in your portfolio to Bitcoin, look what it's done for you. It's the best performing asset we've got in your portfolio. How about we increase the allocation from 1% to 3%? Yep, sounds good, Bob. Let's do that, right? So that's the conversations that's going to be having right now between all the salespeople at all these financial institutions like BlackRock and others to their high net worth individuals and their pension funds, institutions, everyone who has allocated so far. They're going to try to get that number up a little bit because I'm sure that they're getting commission on these kind of things. And Vivek for real over here says, Michael Saylor just released a framework for the USA to make $81 trillion by establishing a strategic Bitcoin reserve. Now, I'm not going to read this, and I don't actually know if this is, I don't have a source for this either. So take it with a grain of salt. But I did read it through myself, and this is the most important line. It says, strategic Bitcoin reserve, establishing a Bitcoin reserve capable of creating 16 to 81 trillion in wealth for the US Treasury, providing a pathway to offset the national debt. And we know that Michael Saylor comes with data. That's basically his job. He's just the giga artistic nerd, right? And who can just gather data and validate and debate the kind of things that he's saying. So, our US national debt is at like $36 trillion. This does seem to be the only way that we can kind of dig ourselves out of this hole that we're in right now. And as we can see over here, Follis says Bitcoin seems to be exactly repeating itself from last year. You can see that we had these basically liquidation wicks. Scam, wick up, wick down, liquidate, and continue to go higher. Also, they had a bit of a sell-off in January, but we've talked about that before, maybe we get a sell-off again. Basically just copied this part of the chart over. So if he did, this is kind of what it would look like being in February, seeing over $125,000 Bitcoin. Just remember, folks, be very, very careful when messing around with things like leverage, liquidation. Like you can be liquidated if you're using Aave. Make sure that your health risk is not dire. Make sure that you can sustain a 30-40% pullback and that you don't get liquidated. And if you do, set your stop losses, set your those kind of things. So Benjamin Cowan says, last cycle we saw Bitcoin dominance drop briefly in November of the halving year before one final surge by Bitcoin dominance in December and early January. Perhaps history is repeating. Maybe Now, like these things are all we know is probabilities, right? We can just see probabilities of what happens. Now, as we can see, well, look at Hyperliquid has crazy funding rates. This thing maybe is due for pullback. I don't know if you want to feel like shorting Hyperliquid, but maybe this is a good chance to do it. It looks like it's due for a reset, but it's been looking like that for a long time now already. So, so maybe not. I personally don't suggest shorting anything in bull markets. Things can always go way higher than people believe. But if we look at the best performing sector over the last month, guess what it is? It's not AI. It's not meme coins. It is actually gaming. So gaming is coming back strong, guys, just as we predicted like it would before. So George McAvoy says the video game industry is bigger than you think. The gaming industry is bigger than all music, TV, and film combined. It has out-earned music and entertainment for the past 8 years. Gaming's massive. And if you look at like Saudi Arabia and things like that, they're building huge gigacities just around gaming as well. And gaming prizes for like e-gaming and esports is higher than it's ever been. It's just an insanely booming economy. And then crypto is actually now legitimized. And also, so you marry those two together, just like crypto and AI, crypto and gaming, it makes a lot of sense. So 2 years ago, the gaming industry was valued around $217 billion. Well, Web3 gaming was still under $1 billion. Today, the gaming industry market size is estimated to be around $270 billion, up 24%, while the Web3 gaming industry has risen to $23 billion, up 2,200%. So Web3 gaming is growing and outpacing the growth of gaming itself. But what does that mean? That means we have a lot of opportunity in Web3 gaming to make a lot of money. As Alex Becker says over here, crypto gaming is not just some hot theory. If you have the attention span to read this thread, it will make you a rich degenerate. It's literally the only sector in crypto breaking into the mainstream. You need to stop viewing it as crypto and more as better code base, and infrastructure for player assets, game assets, as well as code. It's not a matter of if games will use it, it's when, because it's not some optional thing, it's better code. Thinking it's optional would be like saying online gaming isn't going to be a big part of gaming in the early 2000s. It will simply be the norm for video game assets and infrastructure. I agree, right? Because once you can own your in-game assets, once you can trade them freely, which you deserve to be able to do because you paid for them, you earned them, whatever, then you have to use a Web3 infrastructure, right? And we're going to talk about some of these Web3 infrastructure plays in this video coming up very, very shortly. So if you think of it more like ISP or the Internet Protocol, when you sign onto the World of Warcraft, do you think about all the tech being used to generate the online connection or manage your in-game assets? No. Do you think about what game engine it's on, protocols it's using, or how it's pulling your information, gear, and stats, etc.? No. You don't even notice. It's infrastructure, right? And if you watch my channel for a long time, you know that I say all the time, blockchain should be infrastructure and infrastructure should be invisible. That's how we progress, and that's how things go mainstream, when blockchain becomes invisible. Now, for things like serious DeFi and serious things with TVL, like lots of value locked, big transactions, I don't know that we're going to ever completely fully abstract away the blockchain aspect of things because security needs to be at its top front center for that one. But when you have more low value transactions, things like gaming, things like, skins, weapons and games, NFTs, these kind of things that are, 10, 20, 30, 40, 150 bucks, whatever. These things do not need to be high security. They're not. And another reason is they're not big targets for hackers either. Hackers aren't going to spend their time looking how to hack something, that's going to steal your in-game skins, right? Like just like not a high value target for them. Now, the Ronin bridge on Axie Infinity, for example, last bull run, that was a really big thing, but that wasn't gaming. That was value locked in a bridge of hundreds of millions of dollars. That was a good target for someone to target. So that's the difference, right? But gaming should be abstracted away from the end user. They shouldn't have to feel like it, like Gunzilla is doing, which I'm wearing the Gunzilla hoodie right now. Anyway, so crypto gaming will literally be the same thing. It will just be there. And the gaming experience on top of it will be the same. For example, off the grid, getting tons of players and attention, no one even knows they're using blockchain. This will compound when AI is building games and developers need ways to cross-platform game assets rapidly. And guys, we're going to talk about projects doing all of this stuff in this video. So when this happens, it is already happening. The demand for infrastructure will just be stupid. AVAX, Immutable, Super, Beam, and similar frameworks infrastructure will not be speculative assets. They will be gasoline for the entire industry. They will be the internet games run on. By all means, keep fecking around with crypto Ponzi schemes while mainstream adoption occurs right under your nose. So that's from Becker, guys. And as you can see, back in 2017 and 18, we had like play to earn games. And they were pretty low quality or didn't exist, right? We were like buying these games and these valuations were based on things like cinematic trailers that were created like in Unreal Engine 5 and that were actual gameplay, but now we have here in 2024, really high quality games. Some of them on this list, we've got like Shrapnel, Myria, Off the Grid, Nyan Heroes, Mavia, et cetera. And we will have more also that we'll talk about a few more on this video as well. So Off the Grid right now from Gunzilla has 500,000 daily active users, which is 1/6 of what Call of Duty is doing. And it's just in testnet right now. It's not even mainstream. They're still making improvements. And that was a part of it. When I talked to Vlad from Gunzilla, when I went to the office and visited them, they said, Kyle, like, the best thing about having a game that's online that you don't have to like ship and download is that it's upgradable. And so we already saw that in a video I made recently. I talked about how they upgraded the user experience on these first-person shooter scopes and things like that, right? And so they're constantly making iterations to improve the game. Maybe the game wasn't perfect when it shipped initially, but they're listening carefully to the audience and they're making improvements as they go so that it can be one of the best games in the world. Like, this is common sense here. And that's Vlad's goal, right? When I talked to Vlad, I just talked to him last week from Gunzilla, like the goal is to be the #1 game in the world, which I'm hoping will be just because it's literally my biggest private investment ever. And as you can see, like crazy investors, like we invested, it's not only I personally invested as an angel, our fund invested as well. It was the 2 largest investments, basically from the fund and myself. But you can see like Coinbase Ventures, Van Eck, like major Wall Street, Delphi, these huge funds have been investors in Gunzilla and many, many others, right? It's totally going mainstream. So Artifact is another game that's coming out AAA, not on that list I talked about before, but deserves to be noted, right? So it's the first AI game with NFT revenue sharing. It's really cool how the revenue goes back to players. It creates incentive. But as you can see, this is kind of the demo down here. Let's mute the music just because we don't want to get a copyright thing against our music. But you can see it looks really, really good. And so what is Artifact? Artifact is the first AAA gaming metaverse with NFT sales profits sharing between players. Key features, it's AAA quality game with unique gameplay and innovative GameFi modes. NFT marketplace where players can buy Artifact NFTs such as characters, weapons, skins, jetpacks, vehicles, skins, and other. 50% of the profit from NFT sales go to the prize pool, which is distributed among the players. And it's in a metaverse, so Artifact citizens can attend various virtual events such as NFT exhibitions, esports tournaments, and others, which is dope. And so Arty is the game token, right? And it's actually live right now, traded on big exchanges like OKX, Bybit, and KuCoin. And right now it's sitting at, as of the time of this post, last week, we'll see what it is here in just a second, but total supply is 25 million. Circulating supply is 21 million. So almost like 90% of investors have been distributed already. So you have majority of the selling, the selling out of the way, which is nice to see, right? We want to see these kinds of projects where we don't have to worry about tons of dumps coming as the market cap pumps. So as you can see right now, guys, this is for a project that has great investors. You can see most of these private sale investors, pre-sale, all unlocked. Staking and farming is almost done. Pre-sale, this is already unlocked. Treasury already unlocked. Private sale over here is almost done, or at least halfway done. KOL marketing is almost halfway done. The team just starts to unlock now. That's okay. Advisors just start to unlock now, but there's still for 3 more years of vesting, which is great, right? You still have tons of incentives. So we know that they're going to be doing everything that they can to essentially pump their token over the next 12 months and take advantage of the bull market. IDO is fully unlocked, etc. And sitting here at $22 million, 26 million FDV fully diluted, in my opinion, is a pretty good valuation for a game of such caliber, traded on things like OKX and stuff. And as you can see, it has a nice pullback. I mean, all-time high, it's not huge pullback from all-time high, but it is. I mean, 67% pullback from all-time high. So has quite a bit to go. All-time high was $3.20, sitting here at $1. So it still has a little over 3x to go to all-time high, but it's been around for a while. So this is the time where we can see maybe it crushing all-time high. In a bull market for a game of this caliber, it wouldn't be surprised if this thing goes, 500 million, $1 billion, something like that. So it has massive upside potential from here. So if you're looking for a good AAA blockchain game, this is what this video is all about, guys. Moonray is another one. We also invested in Moonray. Moonray, it's also on the Epic Game Store, as you can see over here, and Steam as well. And This is a really, really fun game. I've been watching these guys develop this for years now. We invested in this thing years ago. Finally, it's being traded right now, and you can finally participate in this. And it is a AAA game, and soon it's coming to PlayStation as well. We'll get more into that in just a second. So if you want to follow them, Moonray Game is how you go file on X. Is uncover the secrets of Moonray and carve your legacy in a realm where destiny awaits. Engage in fast-paced strategic battle across post-human worlds, wielding futuristic weapons and unique powers. Dive into the unknown. Let the battle begin. You guys should go check it out. See if you like it, right? And you can see all kinds of really, really good investors over here as well. We're on here: Cardano, Animoca Brands, C2 Ventures, Wabi, Republic, Polygon. So really good cap table as well. Solid game. And coming soon to PlayStation 5, which is epic, right? Like, you're gonna be able to get lots of players playing the game in 2025. So it could be a huge bullish catalyst, exactly what we need, in a bull market to see these things kind of start flying. 171,000 followers on X. Go check it out and follow them so you can follow along. They just listed recently. And as you guys can see here from the chart, actually a really awesome pullback. And this is what you kind of want to see, in my opinion, for price discovery. Look at this thing spiked all the way up here on launch to 22 cents right now, and it's sitting at 7 cents. So it has a big pullback, which is super common. Probably there's some unlocks at the beginning, exchanges selling, all this kind of stuff. Now you have price discovery, right? So price discovery is generally a pretty good place where if you're looking to get into a good project, you have it kind of settled. I mean, it dipped all the way down here to 6.5 cents. Now it's at 7.5 cents. So not far off from the all-time low, which is exactly where you might want to see a good, entry opportunity. And guys, use the Bybit link in the description below. If you're not on Bybit and you want to go trade this thing, this is how you get into the VVIP group that I have, where I make all these crazy calls, like Tardy at 1.7 million, going to 40 million shortly after that. Now sitting at about 25 million right now. So that was just the most recent one. Super Champs is another one that you guys have seen me talk about. If you're following me on X, make sure that you're following me on X, because that's where I'm able to drop all kinds of alpha. I can't, always do in these videos, because these videos take a lot of work. They take a lot of time. But Super Champs is another one backed by a lot of big players like Elio Trades and everyone else. Big KOLs behind this one. A lot of good investors. And it's basically an animated metaverse featuring the world's premier super athletes. So it's kind of fun. It reminds me a little bit of like Wii Sports in a way, and it's just kind of fun animated play, which is like family friendly, fun for everybody. And with multiple games here. So you can see they're also extremely popular on TikTok. TikTok is where the attention really has been recently. And a lot of, I'm guaranteeing it, that in the bull run, that TikTok is going to be responsible for a tremendous amount of attention. And this will obviously affect price as well. So as you can see, I made this post back here on December 17th saying Super Champs is rewriting the rules of GameFi. Champ isn't just another token. It's powering the revolution in gaming with an insane adoption and top tier backing. The hype is 100% real. Here's why Champs is a game changer. Over 120,000 daily players crushing it on base. $30 million raised from elite VCs, fueling growth. Built by industry veterans from Disney and EA, live games already making waves. This isn't just talk. Champ is delivering results and redefining play to earn. The future of gaming is unfolding now. Crazy stats over here, guys. 100,000 plus on-chain daily active users, 5 million game downloads, 500,000 TikTok and YouTube followers, and 200,000 Twitter followers. Guys, this is really a game with some traction. This is different than we saw in all of last bull run. Like, we saw nothing, there's nothing like this in 2017. 2021, there were some games, some hype, some attention, but we didn't really have any real games playing, at least not that were fun, right? We had like Axie Infinity, which was just like a joke, a play to earn. But now we have real games with real users, real attention happening right now. So another thing that was really, I love about this is it's proving out the model that I talked about for LCOs and what Pay Network is doing, trying to get low entry points for investors, especially you, the retail, and to get a lot of the tokens out early, right? And so Champ will launch on Aerodrome. So this was just November 16th, talking about the launch as a strategic DEX partner to support our community-centric model. Tokenomics have been updated to unlock all allocations at launch, except for the team, right? So all investors, all KOLs, everything was unlocked on the launch, and this essentially created a crash. And everyone's like upset, oh, blah, 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 my investment, blah, blah, blah. Whatever. Like, what it did is it allowed everyone who wanted to sell to get out, and those who are bullish and want to hold, like me, who haven't sold one token, not selling any token anytime soon, held, right? And just held. And I love these things where they unlock and get a lot of supply circulating. This gets everyone out who wants to get out. It's like ripping the Band-Aid off and getting the pain out of the way from day one. which is the best thing to do. And as you can see now, they have huge recovery. So it's up 5, like this thing went all the way down. If you look at market cap, this thing on launch went all the way down to just basically nothing. Like it was, basically sitting at like basically nothing, right? When it would launch, it just took a shit in the bed. Like now it's up 565% from November 23rd. So it launched just right before this, went to all-time lows right away, 1.3 cents. And now it's up at 9 cents, right? So you're up like 6x essentially. And this is exactly what you want to see. This is what you want to look for projects going forward. It's like, who's going to unlock a lot of the supply initially? Because look, even on the market cap to FDV, it's close to the same, which means there's only team tokens that have to unlock, and their vesting is going to be over the course of years. And so it's really not a lot of inflation coming to kind of like, dampen the token price. So I expect champs to run way harder in the bull run as well. This is nothing for a AAA gaming project in the crypto gaming sphere. This, $79 million market cap. This thing can easily run to billions in the bull run over the next, 6 to 12 months for sure. So Myria is another one that I talked about before, guys. As you may or may not know, I'm an investor in Myria. I have invested in them a long time ago. I bought a bunch of the nodes, and it's basically like Gala Games. If you guys are familiar with Gala is it's its own layer infrastructure. They sold nodes. They're a gaming ecosystem, gaming infrastructure with multiple games. Myria is doing the same thing. So I look at Myria as kind of like the Gala Games of this bull run, right? And so Myria is doing some pretty cool things as well. And they just introduced Myria AI for developers as well. So Myria AI is an intelligent assistant designed to support game developers in integrating blockchain features into their projects. Functioning as a conversational chatbot powered with advanced LLM, Myria AI will go beyond just answering questions. It will actively execute code and manage blockchain operations like minting, airdrops, NFT transfers on behalf of developers. This means that developers can interact with AI much like they would with a team member, asking hyper-specific questions, solving coding errors, or checking transaction statuses without ever leaving Myria developer portal. By doing so, Myria AI will eliminate the need to sift through vast amounts of data and give developers more time to do what they do best in creating games. So it's, Myria is a game developer SDK. It allows Web 2 game developers to come and build a Web3 game seamlessly on the Myria blockchain, without having to know too much about how to use blockchain integrations. And as you can see, top gaming projects or GameFi by market cap, like really what we're going for is something like Immutable, right? Immutable sitting right now currently at $2.8 billion FDV, and it's going to go much, much higher in the bull run. And we expect another 10x, 5 to 10x, 10, 15, 20 billion for Immutable, totally reasonable in a bull run. If we scroll all the way down here, we see Myria sitting here at a fully diluted value of 130 million. So easily like a 20x just to get to where Immutable is right now. To me, this seems like an absolute no-brainer. Not even to catch up to Immutable, as Immutable is going to skyrocket in the bull run as well. But risk reward, in my opinion, it seems pretty good for Myria, considering the kinds of supporters they have behind it as well. I know it's packed with tier 1 KOLs, and attention is everything in the bull market. So another one is Beam. Beam has been a favorited ecosystem ever since last bull run. Last bull run, it was started as Merit Circle, right? And it was a gaming DAO. And like the good gaming DAOs, it pivoted to something that was more useful. Gaming DAOs became less useful as play to earn became less of a thing. And he saw the other gaming DAO like PathDAO, which rotated or pivoted to virtuals. And now you see Merit Circle pivoting to Beam, which is creating its own L2 ecosystem. And they actually have some nodes for sale as well. So we'll compete in the same space as Immutable, compete in the same space as Myria, for example, as a layer 2 ecosystem coming up, which is very, very bullish for price action, right? And as AIXPT says over here, Beam sitting at $1.7 billion market cap with top 10 treasury in the space. 39% of the supply is already burned, maintaining strength at 3.5 cents while alts bleed. So as you can see over here from Bentoshi update, Beam has outperformed Bitcoin, Sol, ETH, and the majority of market very, very quietly. $228 million in the treasury, most likely much higher since the portcos are up big since the last report. So what they did is they went from, went from like a gaming guild to essentially an investment guild, and then to eventually to Beam, and they created their own blockchain. So out of hundreds or of thousands of projects, being in the top 100 and staying in the top 100 is no easy feat. But that's what's been done in the last 18 months, and being there in the last 12 months consistently long-term support looks very bright for Beam. Beam's biggest announcement ever is finally here. Watch the video below. We're not going to watch the video, but if you go to @BeamFDN, our foundation, you can see the video. But what they talk about essentially is global expansion, Beam being chosen, the chosen one, by Abu Dhabi over there in the Middle East. And Beam AI, Beam's new AI division, which is critical for every company to have AI division, in my opinion. Beam L1, the evolution of Beam network. So think about things like Ronin from Axie or whatever. And then Beam nodes, a huge opportunity for Beam nodes. So if you guys are interested in Beam nodes, right, basically they're just going to allow you to get paid out on the network rewards. It's another good way to diversify into something. So, you can either go buy the Beam token on the open market right now, or you can buy Beam nodes. And I will let you guys know that the link, I don't have affiliate commission on this or anything. Just the link is in the description below as well. So if you're interested in checking it out, go to Medium. I'll post this as well so you can understand exactly how the Beam nodes work, what the expected payouts will be, all the details. I don't have time to get into this video, but I will put this link in the description as well. And guys, this is going to be in the description as well. This is my Excel sheet for top gaming picks. You guys can see here, these are the things that I'm very bullish on, and more will come too as they launch. These are just liquid tokens right now, but right, I've made other gaming investments that are coming up that will add to this list as they launch, and then we'll check out the valuation based on performance and entry point and see if it's a good entry point and what we think the upside potential might be. And that's going to wrap it up for today, guys. I hope you found a lot of value here. Appreciate your time. Like the video if you haven't already. Subscribe to the channel if you're not already. I will catch you guys early next week. See ya.